Hello and welcome back to Grip News. I'm Daniel, and today we have an exciting topic to discuss: investing in stocks. The stock market has long been regarded as a powerful wealth building tool, but it can also be intimidating for those new to the game. That's why we've put together this comprehensive guide to help you navigate the world of stocks and make informed investment decisions. Investing in stocks can provide you with the opportunity to grow your wealth over time, beat inflation, and potentially achieve financial independence. However, it's crucial to approach the stock market with knowledge and a well-thought-out strategy. So, whether you're aiming to save for retirement, build an emergency fund, or pursue other financial goals, understanding the fundamentals of stock market investing is essential. Before we dive into the nitty-gritty of investing, let's start with the basics. Stocks represent shares of ownership in a company. When you invest in stocks, you become a part owner of that company, and your fortunes become linked to its success. The price of a stock is determined by factors such as the company's financial performance, industry trends, and overall market conditions. Now, let's move on to the different types of stocks you can invest in. Common stocks and preferred stocks are the two main categories. Common stocks offer voting rights and potential dividends, while preferred stocks provide a fixed dividend but usually lack voting rights. It's crucial to conduct thorough research and understand the company's financial health and growth potential before investing in their stocks. Diversification is key when it comes to building a strong stock portfolio. By investing in a variety of stocks across different sectors and geographies, you can spread out your risk. This means that if one company or sector performs poorly, the others can potentially offset the losses. Choosing the right investment strategy is another critical aspect of stock market investing. Some investors prefer a more passive approach by investing in index funds or exchange-traded funds, ETFs, that track the overall market's performance. On the other hand, active investors engage in thorough research and analysis to handpick individual stocks that they believe will outperform the market. It's important to note that investing in stocks comes with inherent risks. Market fluctuations, economic downturns, and unexpected company-specific events can impact stock prices. That's why it's crucial to have a long-term perspective, exercise patience, and avoid making emotional decisions based on short-term market trends. To wrap up, remember that investing in stocks requires a combination of knowledge, discipline, and patience. Here are a few key takeaways to keep in mind. Educate yourself. Take the time to learn about the stock market, investment strategies, and financial analysis. There are numerous resources available, such as books, online courses, and reputable financial websites. Set clear goals, determine your financial goals, and align your investment strategy accordingly. Are you investing for retirement, saving for a down payment on a house, or funding your children's education? Having a clear objective will help guide your investment decisions. Diversify your portfolio, spread your investments across different asset classes and sectors to reduce risk. Diversification allows you to balance potential losses and gains, providing a more stable foundation for your portfolio. Conduct research. Before investing in a company's stock, thoroughly analyze its financial health, competitive position, and growth prospects. Keep an eye on industry trends, regulatory changes, and macroeconomic factors that may impact the company's performance. Practice patience. Stock market investing is a long-term game. Avoid making impulsive decisions based on short-term market fluctuations. Stay focused on your investment strategy and resist the temptation to constantly buy or sell stocks. Regularly review your portfolio. Periodically reassess your portfolio to ensure it aligns with your goals and risk tolerance. Make adjustments as needed, but avoid making frequent changes based on market noise. Remember, investing in stocks carries risks, and past performance is not indicative of future results. Seek professional advice if needed, and always make informed decisions based on your personal financial situation. That wraps up our beginner's guide to investing in stocks. We hope this video has provided you with valuable insights and the confidence to start your stock market journey. Remember, building wealth through stocks takes time, knowledge, and discipline. Stay tuned to Grip News for more informative content on personal finance, investing, and the latest financial news. Don't forget to like, subscribe, and share this video with others who may find it helpful. Until next time, happy investing. The information provided in this video is for educational purposes only and should not be considered as financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions.